job openings. And it showed that in the US, a lot of employers wanted to hire. So the estimates were off. And there was actually more openings than what was expected, which is actually a good thing. But Wall Street took that as a bad thing. And that is why today you had a pretty broad sell-off in the US market, especially tech, and it hit Bitcoin and crypto as well. So it wasn't just the Bitcoin crypto thing, it was the entire market. The US market was selling off due to this one economic data, which is job openings. Now, you may be wondering, well, what does that have to do with it? Why would Wall Street sell off because of that? Well, it's because of this. We have a lot of FOMC meetings this year. And, everyone wants to see Fed Chair Powell cut rates and keep cutting and keep cutting. He already was pretty hawkish and said that he's only going to cut rates twice this year. But with better economic data, it's going to give him ammunition to maybe even cut less. And that's not what Wall Street and others want to hear, right? So if you're looking at the FOMC meeting that's going to happen at the end of this month, 95% chance that we're just not going to cut. We're just going to keep it the way it is, which is fine. It doesn't mean we have to get a cut every single FOMC meeting, but that's what Wall Street, they were just panicking. That's the thing. A lot of people think Wall Street are like the smartest, filled with the smartest traders on earth, but in a lot of situations, they're just reactionary. Things were good until the job openings report came out, and then they started selling. They're just very reactionary. They didn't know what was going to happen. They were like sheep and followed everyone else what they were doing. So, sometimes we give Wall Street a lot of credit and those hedge funds a lot of credit, saying, well, they're so smart. They have to be because they're working at Wall Street. Yet sometimes when you look at the moves that they're doing, mimics retail investors, like panic selling and FOMOing. And sometimes when you look at their portfolio performance, it's not very impressive, especially considering you could just buy ETFs yourself and outperform them, or better yet, you could just buy and hold Bitcoin and basically outperform all of them. It's really that simple. You don't need to be some fancy Wall Street hedge funder to do that. And because of the overreaction, we did have a lot of liquidations, okay, on the long side specifically, and that did bring us down more. So you can see 58 million, 207, 128. So if you add it all up, probably about $400 million worth of longs liquidated. So again, a lot of people put a lot of longs, and we had a cascading effect. We need to see more of the short side being squeezed and liquidated and drive us higher. It's not good to see so much longs get liquidated. We need to see more red liquidated, but you know what? With time, it's going to happen. But that, those are two reasons why. Okay, we have overreaction of Wall Street because of economic data, and then compounded with a lot of long liquidations. That's what brought us here. But again, I'd like to remind you guys, we were at this level just a few days ago, so it's not like we're in new territory. And I've been saying this, let's not forget, there are many, 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 many pullbacks in every single bull run. This has been the tamest bull run so far compared to previous bull runs. And, most of these 20%, 22% dips, they were in 2023. But if you count what happened in 2024 and now 2025, our dips are like less than 10%. So it's getting more and more and more calm. So for those of you guys that are new, that may not understand why we have these dips, there are many reasons why. But know that this happens every single bull run. Imagine in 2017, if you got scared out at any of those 30 or 40% dips, or in 2021, you got scared out by those 20 or 30% dips, you would not be where you are now. Okay, it happens every single cycle, even in last year or the year before that. If you were scared out by those 20% dips, you missed out on a lot of gains. Okay, so I've been saying this for a long time. I've been saying this for the last 2 weeks when we were, a little bit weaker. It's the same story, guys. You guys should know. The future is bright. Bitcoin and crypto is not going anywhere, especially when you have more and more companies that are buying Bitcoin and DCing along with us, especially Sailor, who's just going nutty. I think if you add Sailor's MicroStrategy's number, it's more than everyone else combined. That's how much he has. But still, with him, and here's another headline, the Czech National Bank is considering putting Bitcoin into their reserve. We know that Trump is going to hit, become president in a couple of weeks. So the U.S. will do it. Other countries will do it. So it's FOMO among countries, among Wall Street, public traded, private companies, whales, retail investors, right? So dips are gifts. Dips are gifts. That's the only way to think about it. You got to retrain your brain into thinking, yeah, it sucked that we didn't go up higher and move from 102 to 108, which could still happen by the end of this week, even though it may seem like, well, that's not going to happen now that we're at 97. Tomorrow, we could go right back up to 100,000. With a good day of Wall Street, we'll be right back up. And, ETFs are still buying. Reserve of Bitcoin continues to drop. Look at that. It just continues to go down and down and down. So the supply shock is still happening. And the hash rate continues to go up. So fundamentally, Bitcoin couldn't be better. Couldn't be better. And again, when Trump takes office, we could see that explosion. Look at what happened last time, and that was 2017. Right when he took office, that's when Bitcoin kind of just went and didn't stop. I mean, it was a different time back then. Bitcoin was below $1,000 then. We are 100 times higher than last time when he took office. Just think about it. Bitcoin is 100 times higher than 2017. We went from $900 to $90,000 plus dollars, 100x in 8 years. What investment out there can give you that? Now imagine if you got scared out by one of those 20 or 30% dips in 2017. You would have missed that 100x gain. That's crazy to think about, 100x in such a short amount of time.